Car Talk number 3, and today we're just going to be going over our weekly recap, and portfolio's up 7.5% this week. It was a great week, even though the market is absolutely tanking. There's still opportunities to be made everywhere, whether you're playing calls or puts, it doesn't matter. So in one of my comments on one of my videos I had, someone said, hey, I understand the fair value gaps that we're using, but I don't get the clear break of structure. And this part is very confusing, and I get it because in the past, I got the FVGs too. But when it came to that break of structure, I was getting in most of the times way too early when there actually wasn't a clear break of structure. And I'll show you an example here, but first, I'm gonna tell you, one of the main things that will keep you from getting that proper break of structure is lower time frames. You need to bump into the higher time frames, and I'm not talking you need to go into like 30-minute hourly time frames, but even a 5-minute, a 3 to 5 minute with a retest is going to be much stronger showing your break of structure rather than a 1 minute. 1 minute is fairy tale land, and I'll stand by that. So check out this example that we did in the past week, and I'll show the trade confirmation too, showing you how we actually made money off that, just for any of y'all that might seem fishy about it. All right, we're looking at QQQ, what we took on Monday, which was puts off break of structure plus fair value gap. And when you're looking at this at the start, you're probably like, this looks terrible. I don't know how you take anything in this. But all I did, I marked out my pre-market highs, pre-market lows, and all I'm doing is waiting for price to take out one side or another and get a fair value gap that's respected. Then we take our entry off it. So as you see, we get a little consolidation around market open, but then we take out this pre-market low with a strong candle underneath. When this happens, I go in, mark out my fair value gap, just like that. And we see we get a nice little retest on the 3-minute, showing, hey, the buyers are no longer taking control, sellers are stepping in, so I can take my entry after that closes. And the crucial part is, you don't want to take your entry right off that fair value gap forming, because say, hey, if I got in right here at 490.32 and it's just hitting its retest all the way up at 492, you are losing 35-40% of your entire contract before it goes back into profit, and that's just scary. So if you really want to look for the better wicks, hop down into the 1 minute. You can see, boom, hit the retest, strong rejection. Take your entry off that, but I took my entry when I see an actual wick. When I see the wicks showing, oh my God, we got a bunch of selling pressure coming in, that's when I take my entry. So I'm not sure which one took it off, first or second. Either way, you hold stop loss above the fair value gap you mapped out.